Hello guys, welcome to Trade with Smart Money YouTube channel. Today's session we are going to discuss about either market will going to crash, whatever the fall we can see on last couple of days, either it will going to continue or it just a correction. So we'll get a clarity on this. If you observe Nifty and other indices today's performance, Nifty is fell 0.7%, which is 170, 180 points down as of now. And if you observe Sensex nearly 500 plus points down. And if you observe Nifty Finser, which is 320 points down, and Nifty Bank 800 points, and mid and small cap fell a lot. If you observe the mid cap, which is fell nearly 2%, and if you observe the small cap, which is fell 2.5% and 2.6%, a small cap 100 and 250 indices. So most of the indices, if you observe, almost all the indices are in selling pressure, and India VIX, which is volatility index, is up by 6.65%. So this is looks like a major downtrend. Okay, but how do we know this trend, whatever the fall which is creating, it's a crash or just a correction? See, whenever we do a market analysis, right? So whenever we do a stock market analysis, we do two types of analysis. One is fundamental, and number two is technical. So the fundamental news which is going on markets is the Iran and Israel, the war news. There many people are talking about World War III, and the market will going to crash, and entire world will going to lose so much of trillions dollars of money will going to washed out from the market. So this is what exactly the news is ongoing now. Whatever the news it could be, we'll talk about the news later. Let's talk about technical parameters. The first thing is whenever we study technical analysis, like from basic to advanced levels, and many advanced concepts like order flow or smart money, or basic concepts like price action analysis, candlesticks, or indicators, or whatever the technical analysis we study, these all depended on two parameters. Number one is price, and number two is volume. So price is what exactly we just saw now. The tick by tick the price is changing, right? That is called price behavior. Number two is volume. So combined together we call it as a technical analysis. Now we can see the price is falling. So this is the behavior of the price now. And what about volume then? We must check the volumes also, right? What exactly happening in the volume? So many cases the same thing was happened. For example, last June 4th, last couple of months back, June 4th, when the election results was announced, indices itself fell. Nifty was about to hit the lower circuit, and many other indices was fell like anything, and immediate next day onwards the market was bounced back. No one has thought that the market was rallied like anything. If you see a Nifty chart on the day, let me show you the Nifty chart, what exactly happened. If you see the Nifty, yeah, so this is a small cap. Let me see a Nifty chart. Yeah, so if you observe here on June 4th, almost Nifty fell nearly 9.5%, 9.4%. Then immediately it started recovering. So on that day also, many people given the same thing, market will going to crash in the upcoming days due to unstable government and the results whatever they expected, due to the election results and the election outcome, whatever the prediction results was completely mismatch, and the outcome was not good at the time. So the market started falling like anything. The market is trying to crash that time. Then what happened? Market rallied like anything. Okay, so again here whoever predicted the market crash got failed. Why they failed, I'll tell you. Okay, every crash, if someone talk about in a news or somewhere they talk about crash, it never happens. There is some confirmations before market crashing. Now if you observe the same behavior, whatever the news it could be, the fundamental news, the war and World War III or global sentiments is bad, whatever it could be, now we are in a fall. See, this is a very good fall or very good correction, I can say. That I'll give you a conclusion, it's a correction or a fall. So is it going to fall further or it will going to bounce back? Okay, exactly. This is what we're going to figure it out now. If you observe the market behavior, whenever if any stock is going downtrend or an uptrend, we do a volume analysis in four categories, which is true uptrend, true downtrend, reversal, and from bottom out reversal and top reversal. So if you let's talk about the true uptrend of characteristics of true uptrend. If you see a original uptrend will create like this. Okay, so market will create a higher high, higher low, higher high, higher low, higher high structure. This is called a bull run, a bullish move. And in this duration, what happens when the market creates a first higher high, volumes will be, the green volume bars will be like this. And when the first higher high is broken and it creates a next higher high, much more big volumes will be created. So this is called a healthy bull run. Again, when this particular high is created, much more bigger volumes will be created, are almost equal to the previous higher high, whatever the volumes was participated, almost equal to that next higher high volumes will be participated. Still that we consider it as a healthy up move. So this is a true uptrend. Let's talk about a true downtrend. Okay, when the market is creates a lower low, a lower high, lower low, lower high, and lower low, this is called a downtrend structure, a selling structure. So selling structure, whenever price breaks the previous low here, and volumes must be, a big volume war should be created. Then again, whatever the previous lower low is there, when the market is trying to break down that level and it's trying to create a new lower low, at that time another big volumes should participate, and this volume should be bigger than the first lower low volumes whatever it's created. So this is called a true downtrend structure. Now let's assume in the other scenario, let's say market is creating a lower low, lower high kind of a structure, but volumes are drying out. In the sense, volumes are not participating much. Okay, see, keep on volumes are decreasing like this. Okay, so here if you see, volumes are drying, at the same time price is going down. So this is called a reversal pattern in volume analysis. So if I want to, let's say, let's say see, if we predict the market fall or market crash, whatever people are talking about, we need a downtrend structure like this. What we can see, that's a downtrend structure in the markets. At the same time, we want in a stock, equity stocks, when you open, we want a high volume participation. A big selling volume bars along with a downtrend will lead the original selling pressure in the markets. If that is not happening, only small bars are creating, it's just a dummy candles, which is small bars are creating, and market is falling aggressively. There are two different things. One is just a small candle with a small volume. It means participants are very less and behavior of the price also a very small behavior. So no one will going to question at the time, or no one going to show interest at the time. So there are something which is abnormal, some cases which is abnormal, like let's say the stock fell 7%, which is such a big fall, but volumes are dead, a small volume bar. So this is something interesting. Why? Because market is crashing, whatever people call a fall, a major fall is happening, but there was no participation. It means they're trying to take the down stock to buy it at the lower prices. They're trying to uh, pull the prices down to buy at the lower levels. So now in stock market, what is happening, especially in our Indian market, you guys have seen there are so much of participation in the market. So every time whenever the market makes a rally and it comes for just a small retracement, people are buying, and again it creates a rally and a small return, people are buying. Again what is happening, it makes a high and a small retracement, people are buying. So it means people are not exiting from the market, not aggressively exiting from the market, but they are aggressively buying the stock. What institutions want is retailers should exit and institution wants to buy. Maybe this is the right scenario for them. What is happening now, global sentiments is not good, there is a war situation, and the entire market, if you observe, the news is against to the buy side. It's completely a sell side news which is currently going on. At the same time, market is also reacting to the sell side and market is aggressively falling. So this is the right time retailers can think market will going to crash. Okay, that is what the news is spreading. And is it true or not, that we can check in the volume. Okay, so now maybe institutions wants to buy at this time. That is why what they are doing is they're trying to take the prices downside and they're trying to buying the prices at the lower side. Who knows that we will check now. Now let's check a couple of stocks. Now we just saw the indices behavior. If you see 2.8% and 2.85%, both nifty small cap 100 and 250 indices is aggressively fell today. If you just look at the candle size, See the candle size, such a biggest candle. If you see the this particular red candle, which is almost a biggest candle from August, September, October, which is nearly 2 months plus. If you see the data, today's candle is the highest selling candle, or no, the biggest candle compared to the 2 months candles. Now, this selling candle, whatever you see, is it really a true selling or just a correction or a fake candle? Let's check it out. So I'll take a couple of stocks and indices, and we'll check volume analysis accordingly. The stock called, let's say, Indostar, which is one stock in small cap. Let's check behavior of this particular stock. If you see, Indostar fell 7% today, which is from the day previous day closing to current market price. If you see, 6.6% downtrend, which is nearly 7% fall. When the stock is falling, we are about, see, we are at 330 now. It means we are about to closing hours of market. So volume must come, a big volume should participate. If you see here, such a 7% fell in the stock, but volumes are not that much big. If you see a small volumes, if you see the buying volumes also, still it's the greatest volumes are participated. And if it is, if the market is created, the stock is fell 7%, volume should be dominated. Sellers should dominate the stock. The volumes come aggressively. If you see here, let's talk about this particular case. So here there was a big buying candle. So when the big buying candle is creating, volume should be dominated, right? See, sorry, this particular candle, see, a big volume and big buying candle, volumes are dominating, buyers are dominating, right? So similarly, we need such a selling candle confirmation if really market is under selling pressure or the stocks under selling pressure or aggressively people are selling the stock. So that is not happening. Let's check one stock. Let's check a couple of stocks in this scenario. Let's take the stock called, let's assume, Skander. If you see this stock, yeah, what is happening? This particular stock also fell nearly 6% plus. And if you see the volumes, not aggressively falling. And if you check Equitas Bank, see, volume is dead. This particular stock also, it's a small cap stocks, volumes are dead. If you see here. And let's take one more stock called Volta Map. Let's check Volta Map. This particular stock also, if you observe, volumes are average, not dead, it's just an average volumes are participating, still that's fine. Now let's take the stock called KFI, KF Infotech, KFintech, okay, the stock called, okay. So this stock, if you see the volumes today, the stock fell how much? Let me check the percentage first. Stock fell 2.8%, which is nearly 3% fall in the stock. And if you observe the behavior of the stock, so here what is happening? There is a big buying candle, and buyers also dominated the stock. The big buying with a big volumes participation, it confirms a true buy. At the same time, again, what is happening? The stock fell nearly a 10% fell from the highest point. So after falling nearly 10 or 12%, if you see the volumes are continuously decreasing. It's a dead volume. So it means whatever the market today we saw, right, this 3%, whatever we are seeing in the market. So this is just a correction. Many people, if you observe the indices, right, 2.96, which is nearly 3% fall in the indices. And if you see mid cap, 2% fell. And if you observe the large caps, Nifty Finser fell 1.7%, Nifty fell nearly 1%, 0.91% fell. Whatever the selling pressure which you see in the markets, it's technically it's not showing any kind of a fall, it's showing just a correction. Maybe market has rallied a lot and it's waiting for the one right time to do a kind of a major correction. So that is what happening right now. We are in a major correction. There is no fall in the market, there is no crash in the market, it's just a correction. Now let's talk about levels of the Nifty and when we can expect bounce back. Let's assume today we are currently Nifty is trading at 24,788. The current index is trading. Now can I expect from tomorrow onwards bounce back from the Nifty? Today we are in Monday, and let's say tomorrow Tuesday. Tomorrow onwards, can I expect the bounce back? Let's discuss that. So if you see the Nifty here, Nifty it's already fell. You can see last 6 trading sessions there was a vertical fall. It's a great fall in the market. So can I expect the bounce back from here? Can we, let's discuss that. I'll show you one of the best tool, one of the best analysis tool, which always help me to identify a pinpoint bounce back point, pinpoint candle where the market will bounce back. So let me show you that. Can see wherever you see the bounce back, right? Maybe this particular candle, maybe here, or maybe here. So this all the key level candles will be easily identified with the help of that analysis. So let me show you that. Maybe you guys have heard that PCR, put call ratio. Put call ratio is one of the best tool. But whatever other guys will show, right, like, or no, some other softwares, wherever you see a PCR chart, that doesn't help. So we need a total clubbed PCR. Total clubbed PCR in the sense, let's say current month, following month, for month, all the puts, and current month, following month, for month, all the calls. Total puts should be total calls. If you do, you'll get the total PCR of the all the existing contracts in the market. So we need that PCR. So exactly whatever you see in this chart, right, this is called, this is the chart which represents all the total PCR. Now let's check the levels. Here you just remember two things. One is above 1.5, above, let's say above 1.40. Let's talk about 1.35, 1.40 is overbought. When you study RSI, right, RSI, how you study, above 70 is the overbought and below 30 is the oversold. That is the levels you try to book the profit and buy the stock, right? So similarly apply the same logic here also. Above 1.40, let's say this is one. If you observe here, we are in the 1.5 range and let's say 0.5 range. So in between PCR is trading. Let's talk about that. So here 1.40 is my overbought zone, and it comes to bottom, I'll consider it as a 0.70 is my oversold zone. So these two zones, whenever Nifty hits, the PCR hits, I will try to go and place the buy order in a first buying candle. So what is first buying candle, that I'll explain you. So now let's talk about these levels. I want you guys to remember these dates. These are very, very important here. Let's talk about the first date. The date was 17 Jan 2024. What was the Nifty level? 0.70. So 17 Jan 2024. Let's check the Nifty chart first. So we are in April, February, January. So 17 Jan. Let's check the date. So here we are. This is a candle which is 17 January. As I told you, first buying candle after the PCR oversold. After PCR oversold, first buying candle is a bounce back confirmation candle. Now if you observe here, in this scenario, this is a 17 January selling candle. Then which is my first buying candle? Next day is my first buying candle. If you observe the behavior of the market, almost the same level, market is bounced back and took a support, and again it's bounced back. See, this level becomes a very crucial zone for our entry. This is the first entry, one analysis of the PCR level. So let's check multiple levels of PCR, the multiple locations when the PCR hit 0.70 or below that, and let's see the how exactly is doing it. So one more date was, it was 0.66. You can see the value of that PCR. 0.66 on the date was February 28. Let's check on 28th of February how exactly the Nifty is doing. So here we are, 28th February. If you see, there is a big red candle. So exactly this red candle, if you see here, this is a 28th February big selling candle. Then where we expect the bounce back, first buying candle after a PCR oversold. So next buying candle is here, and if you observe the price behavior, it's gone up. See, every situation, maybe here, maybe where we discuss the January scenario, right? Here, so in every situation, wherever the market is aggressively falling, one or other way there was a negative news. Maybe not major, maybe minor negative news, but there is some negative news in the market. They spread the negative news so that market will fall and they can take the maximum benefit out of it. So here exactly same thing is repeated, and here also same thing is repeated, and as per our PCR analysis, from here it's bounced back and here also it's bounced back because PCR reached below 0.70. Now let's talk about few more levels in the PCR analysis and how exactly it's doing. Now the date was 0.73 minor 0.64, March 13th of March, and the next date was 19th of March. These two dates are very crucial. So 13th and 19th, check it out. So in the March analysis, let's see 13th and 19th dates. So here we are. This is on 13th and then is 19th. Yeah, this is the 19th. So in is this candle is our PCR oversold candle. It's confirming that market will bounce back. The next day is a buying candle. So there we expect the market to bounce back, and that lowest candle is our where we try to keep the stop loss if you participate in indices. Otherwise, if you participate in equity, so wait for a one candle which has to trade below that level. The candle at least a 60% or 80% of the body should trade below the stop loss, so that we expect from the market. So that is not happening overall. It's just a closing price. And if you look at the levels, so this candle I may consider this trade as a just a SL trade. It just closed below that point. Okay, here. And the next 19th of March, the red candle which is created, and if you observe, we got a first buying candle here. So after the first buying candle, look at the rally. So from there only, exactly pinpoint candle, we are able to identify the bounce back up, exactly the bottom point. So here also we successful with the help of PCR oversold levels. If you see a few more trades, if you observe here, the date was May 9, no, May 9, and one more date. Yeah, 30th May. 9th May and 13th May, again a crucial zones for me to do the market analysis. Let's say 9th May, let's check the 9th May first. Yeah, if you guys observe here, this is the 9th May candle, which is a selling candle. Okay, if you observe here, this is the 9th May selling candle, which is PCR says that I am completely oversold now. So whatever the first buying candle will going to create in the market, from there market will bounce back. That is what the PCR says. And exactly from here, we got a first buying candle. Very next day, we got a first buying candle, and the swing lowest point is our stop loss. And look at the behavior. It's a great move, right? It's a great move. And again, if you see the next point, which is 30th May, you just see the 30th May behavior of the market. So 30th May, if you see the market, exactly here we are. So 30th May, here you may ask two questions. One is market has fell. I'll tell you why it's fell. And number two is where is the first buying candle. Okay. See guys, here what is happening, there are two interesting things is happened here. One is market is fell and PCR is oversold now, and without buying candle, market opened a gap up of 800 points. Market opened, Nifty opened from here closing price to next day opening price 800 points gap up, just one day before the election results announcement. Okay, that was I think June 3rd, I guess. Yeah. Exactly, 3rd June. Okay, there was a big event is happening in India, which is decides the next 5 years government of India. It in such a big fundamental news is announcing. So one day before, market get exhausted. This gap ups, when you study gap up analysis, right? Breakaway gap up, continuation gap ups, common back gap ups, and exhaustion gap ups. These are the different types of gap ups are there in the market. So here we got a exhaustion gap up. Okay, this is called exhaustion gap up, where the previous day was closed here, 800 points gap up. So this is a unhealthy situation and it fell. So as per PCR, we are right. Okay, only buying candle is missing. PCR told that here is a oversold is happened, buy it if the first buying candle creates, and there you expect the up move. If you see, it broke in the previous higher high also, number one, and it's given 800 points rally in just a single day. So as for PC analysis, again we are correct now. Okay, so this is one more level. And coming to the next crucial zone, if you observe, this is 0.73, which is almost near to the 0.70 on June 4th. June 4th is results day. If you see the market, here we are in a June 4th, this is a results day, and exactly this particular point, after the June 4th result, very next day we got a buying candle. So this particular point we buy it and we keep the recent swing low, the candle or recent swing low, which is very big. Basically, if you participate in indices, right, it looks a very big stop loss, and many people have that fear. If you participate in stocks, right, stocks has a different levels. So there we can participate in equity market and losses are very minimal. And there again, if you see, market got rallied. Now again the scenario is same. What I'm trying to tell you is, every time, let's say when the indices on the day of election results, indices about to hit the lower circuit, Nifty mid cap fell 13%, Nifty small cap fell 12-13%, Nifty itself fell 9.4%. It's another 0.6% was there to hit the lower circuit, the first level of lower circuit. So in this scenario, many people talking about market will going to crash. There was an unstable government. Maybe the BJP government won't going to form in the in India. So these all the negative sentiment was hit and market started crashing. And further, many people talked about this kind of a fall, but it did not happen. Why? When I was observing this candle, when I was observing this fall, market, all the stocks, the equity stocks itself fell 7%, 10%, 15%, but volume was dead. When I was observing this volume bars at the bottom, it was dead volume. I knew that this just, whatever the fall it could be, whatever the crash it could be, it's just a correction for me. It's not a major crash in the market. Now, let's move to the current scenario of the market. So if you observe the current behavior, current moment scenario, which is here, last trading session, which is on 4th October. 4th October, if you observe, 0.69 is the PCR level, which is below the 0.70 where we are expecting PCR was completely oversold zone. If you see here, the market Nifty behavior currently, now answer is simple. Market rallied, it got a correction, again rallied, we got a correction. Okay, so now the question here is it a correction or is it a crash? Getting my point? Is it correction or crash? Now when I see a mid and small caps behavior and the volume participation, for me it's almost dead. Volumes are almost dead. It's a declining volume. Okay, number one, it means it's not a true selling, it's just a correction with the help of volume analysis. And number two is, market was, the PCR was completely oversold on last trading session, which is on Friday's closing. And today again market, what happened, it closed below that point. It means market was about to close green today, but still it's in a red color. They want much more liquidity. In my analysis, I always say, why after completely PCR oversold also, still why the market is going down? Because they want to collect the more liquidity. Let's say liquidity grab means, let's assume for example market has fell here, and after that let's assume we need 1,000 CR shares has been, big institutions wants 1,000 CR liquidity grab collection from the downside, but let's assume a 700 CR has been collected. Okay, so they need another 300 CR shares at the bottom side, so for that they're taking it down. But overall, if you see the PCR, what is happening, we are at 0.69, no volume participation, or volume participation is very less. Okay, at the same time market Nifty itself, if you observe the Nifty, it's a major indices in India, itself fell, corrected 6%. 6% correction with a 0.6 and completely oversold level of PCR with the less volume participation. This confirming me, whatever the negative news, whatever the global news, whatever the war or crash, whatever it could be, for my analysis, it's just a correction. Okay, it's just a correction. Now we got a clarity whether it's a correction or a crash. Now let's talk about when the market will going to bounce back. I believe from tomorrow onwards. Today We are on 10/7, 7th of October we are currently. From tomorrow, 8th October onwards, I'm expecting a bounce back. So tomorrow onwards, we expect two scenarios. One is it can come 50% retracement and further fall if it wants, at least it has to come 50% retracement, number one. Number two, it can break the one more high and it will create another all-time high. So this is what the technical representation. I'm not talking about anything fundamentally. This is what technically. And one thing, guys, I always trust this quote. Always charts confirm first before the news. Remember this. If either crash or a big move, first confirmation will be done with the charts, not the news. News comes later. Many people think that news came, stock fell. No. First, the stock itself will gives you multiple signals. I'm going to fall. Then the news comes and it takes down. So this is what happens. Best example is whatever this crash people are talking about. Let's talk about this crash. Many people talking about this crash, right? Let's see before itself, before this fall itself, how the market was given multiple warnings before this fall. Let's check that. So one of the best tool for me, it's always the greatest tool for me. It helps a lot to do the market crash analysis or the overbought and oversold analysis of PCR. Now if you see here exactly this particular point, which is on 20th September, what has happened? PCR reached 1.5, which is almost highest point from last couple of months. Okay, 1.5 PCR is reaching on 20th September. Now Iran has launched 200 missiles on Israel and Israel is trying to retaliate, and there are Lebanon and Israel, there is a fighting is happening. So these are whatever the war news it could be, we'll keep aside for a while and let's talk about technically what is happening. On 20th September 2024, Nifty reached 1.50, which is the highest PCR of the so many months. Let's talk about equity market. Sorry, indices in a spot market. So 20th September, which is a candle, let's mark it. Here is the 20th September candle. We are in 20th September 2024. It's a buying candle. It's a very good buying candle. And PCR is completely overbought. Then which candle is confirming me that market will going to fall? First selling candle. When I was told you, if you want to expect a bullish move after a crash or after a correction, we need a first buying candle. At the same time, just opposite, the rules is opposite to the buying. Okay, just sell side is just opposite of buying. If you observe here, buying candle PCR got exhausted. Buying candle still PCR is completely overbought and again overbought. See, the people are happy when the market is creating a higher high, new all-time high, again new all-time high, again new all-time high. People are very happy, but this is unhealthy zone. Many people won't notice that. They don't notice that this is completely unhealthy zone. So market is moving with the unhealthy. So we need a first selling candle. We got a first selling candle with the unhealthy up move and market got fell. And now you guys tell me, whatever the news it could be, technically we are right. It has to fall. PCR was completely overbought here. That is the highest point PCR is reached. Above that highest point, still the price is moving up. Just think about the unhealthy point, how much unhealthy market is, and that lead the major correction. So this major correction was expected and it's happening now. And I believe maybe today's low or maximum tomorrow's low, whatever it's going to create, that is the lowest point of this particular move, and we can expect a bounce back. So there is no crash in terms of technical analysis. So in terms of, you can say my point of view of technical analysis. Okay, so this is completely a overview of, we're trying to figure it out whether market will going to crash, and many people, even my stocks also, if you observe couple of stocks which I have been bought, there are many stocks is in a red color. See, these are all the stocks I shown you, right, in watch list number 3. So these are all the stocks I have a holdings in my account and multiple few of my accounts. So these stocks also are in losses, but still I'm holding. I'm not taking any aggressive action to exit from the stocks. I'm not doing that. Why? because I knew it can be 8%, but still it's a correction. It's not a crash. Why should I exit in a correction? After the correction, there is a bounce back. I'm ready to exit at bounce back, not at correction. Okay, so that's the reason we're still holding. And overall market, if I see in technical point of view, it's really a good correction. There is no fall in the market. There is no crash in the market. So believe that and try to do your own analysis in the markets and try to understand the technical analysis in a better way. And always remember one thing: whenever you do a price and no technical analysis, compare with the price and volume. Don't give only importance to either price either volume. So mix both and get the clarity and get the tools which really helps you. Like there are multiple tools, there are multiple sources from the markets where you can get the better analysis tools. So try to figure it out that and try to get the clarity. Don't trust on the channels, other influencers. Especially stay away from the certain kind of a telegram channels and tip based or some other kind of social media platforms. Stay away from that. Do your own analysis and get the clarity and go with it. Okay, so this is completely overview of either market will going to crash or bounce back. Happy trading, all the best.